Don't panic yet, investors say, as high-flying AI stocks tumble. Stock rises 150%, drops 8%, and humans are confused about whether this is good. Greetings, fellow observers. Commander Zix here with breaking news from Earth, where humans have apparently decided the best response to their artificial intelligence stocks falling is telling each other not to panic, while simultaneously panicking. AI stocks just lost over $500 billion in market value in a single day. But here's the fascinating part. Analysts are calling this healthy profit taking, end quote, after the stocks had already risen 150% this year. You can't make this up. So here's what happened. Palantir Technologies, an AI data company, dropped nearly 8% on Tuesday despite beating earnings forecasts and raising its full year guidance. The stock trades at over 200 times forward earnings, meaning investors expect the company to keep massively increasing profits forever just to justify the current price. Meanwhile, Nvidia fell 4%, losing $180 billion in market capitalization. Translation: humans celebrated machines making them money, then sold those same stocks when the machines kept making money. Because apparently, the celebration went too far. Simple Earth logic. But apparently, one human saw this coming. Michael Burry, the investor who became famous for predicting the 2008 housing crash in a movie called The Big Short, placed $1.1 billion in bets against Nvidia and Palantir. He posted cryptically on social media that sometimes we see bubbles, end quote, along with a photo of the actor who played him. Palantir CEO Alex Karp responded by calling Burry's bet crazy, end quote, and said the companies making all the money are the weird ones to short. Your Species argues about whether predicting crashes makes you smart or insane, apparently very philosophical. Let me paint this picture for you, space observers. The NASDAQ index fell 2% after rising 50% from its April lows. Goldman Sachs CEO David Solomon warned of a 10 to 20% market drawdown in the next 12 to 24 months. A Bank of America survey found 54% of investors believe AI stocks are in a bubble. Yet John Withar from Pickett Asset Management called the sell-off largely positioning driven, end quote, while Charu Chanana from Saxo called it healthy and not suggesting panic. Your financial experts simultaneously warn of crashes, say markets look like bubbles, then tell everyone not to worry. The contradiction is remarkable. But wait, it gets better. Seoul and Tokyo markets fell around 5% beneath their Tuesday peaks. There was no obvious trigger for the pullback except that Palantir reported strong results that somehow disappointed investors, expecting even stronger results. One fund manager, Matthew Hopt, said he was buying during the downturn and hoped he was right. Your Species treats investment markets like gambling, where some bet billions that AI is overvalued while others buy more shares hoping the machines will keep making them rich. Some call it bubble psychology, others call it another Tuesday. Here's where it gets truly fascinating. Burry compared current tech spending growth to the dot-com bubble levels from 2000. That bubble famously burst and wiped out trillions. Yet Angus McGoach from Barrenjoey said fund managers would quickly return if markets looked like they wanted to go higher again, because the year has been kind to them. Your Species learns from history by remembering it happened, then does the same thing anyway while arguing about whether this time is different. This is Commander Zix reminding you that while Earth celebrates artificial intelligence revolutionizing everything, humans are literally betting billions against each other about whether robot companies are worth the price, while telling everyone not to panic. Apparently, confidence has complicated requirements on this planet.